Hey everybody, welcome to the SaaS Founders Show. We're back for another episode, another exciting founder to talk to. Andy Halko here, my co-host. How you doing today, Andy?
Good. How are you doing, Tony?
Good. I've been looking forward to spring, and it starts to show up, then it goes away. So that's kind of where we're at here in Northeast Ohio right now.
That's
How
right.
about you? How are things?
Oh, just enjoying every day. I've got a little bit of the cold, but that's okay. We're still having fun. So
It's going around. We have an international guest here joining us from Berlin today. Um, Arnab is the co-founder, one of the co-founders over at Stoker. And I'll read the description here about Stoker. They're the EU's pioneering digital investment marketplace for alternative assets where smart investors connect with and fund innovative businesses. Stoker is the all-in-one solution for young and growing ventures looking to raise capital in the EU. With that, let me bring Arnab on. Hey, Arnab, how you doing?
Hey Tony, I'm good. How are you doing?
Really good, thank you. Appreciate you being here. I read the brief descriptor, but tell us about the business. Would love to hear more.
Yes, so Stoker is actually a marketplace. We are operating mostly outside the US market at the moment, unfortunately. What we are doing is we're helping companies and innovative business founders to access the capital market with financing, which is very much controlled by some of the biggest players in the market in that sense. So what we are trying to do is opening up opportunity for financing for small and medium-sized companies, asset managers, boutique asset managers, or it can be also some gaming companies and those kind of ventures. And they can use Stoker as a marketplace to raise capital. And what they're doing is when they're issuing, or raising capital on Stoker, they're issuing their debt instrument or the equity instrument in the form of a digital token on the blockchain. That means what they're doing, let's say you're raising a capital, you want to issue your debt instrument like a bond, or you want to issue an equity, you issue a digital securities or digital token on a blockchain, and you raise capital via that, fully regulated under the European law.
It's fascinating, and I think this whole conversation around fundraising and raising capital for founders is fantastic for our show here today. So super interested to dive into some of these topics. I know your co-founder was supposed to be on. Sounds like he had family emergency, so I'm sorry to hear that, but we'll have to catch him on the next time we have you guys on, talk to you a little bit further. So I would love to hear a little bit about the origin. Where did you guys come up with the concept, for this marketplace?
Mm-hmm. I think and one interesting part is, before I started the business journey, I am a real believer in Bitcoin and the fundamental philosophy, what Bitcoin brings to the market and what Bitcoin showed that you can have a money without a state. And, in today's situation, I think when the Ukraine war is happening and, global financial situation is kind of looking for a reset button, I think Bitcoin becomes a very interesting, tool or monetary instrument to look into. And the philosophy is actually Bitcoin can fundamentally change the payment industry, how we know today. Can it also change the capital markets or the stock market as we know today? And that actually motivated me, Tobias, and two of our co-founders to explore is how we can issue stocks and bonds on the blockchain. Because if you can issue money or kind of any other settlement currencies on the blockchain, can you also issue a capital market instrument? And that triggered for us to find out, can we do it on a legal basis? Because securities are a very regulated market. It is one of the most regulated space in the financial markets. So we have to balance innovation with the regulation, right? We cannot go crazy and issue something completely unregulated and then get I would say smacked down from SEC kind of regulators. So what we need to do is a balance between the regulation and the innovation, and we try to find out what we can do and how we can do that. And while checking that and while exploring this market, we realized the stock market, the current stock market, which maybe in Nasdaq or New York Stock Exchange and others, these can be only accessed by a very handful of companies, right? And these companies only access it once all this VC investment money has been already made, the company has already reached a certain level, and then only they can go to the public stock market and raise capital. So, for small investors like us, it's very hard sometimes to get access to those kind of companies at a very early stage. Equity crowdfunding came with a very interesting concept that you can raise investment at very early days and be a part of the investor community with a smaller amount. But the challenges with equity crowdfunding happened is those stocks cannot be traded easily in any digital asset space. But what we saw in the cryptocurrencies boom, that you can actually issue and trade crypto assets in a lot of digital asset exchanges with very less middleman, because the technology can reduce a lot of middleman. So we took that element and we put it into the traditional stock market, and we said, okay, the companies can issue a debt instrument or an equity instrument, tokenize that instrument in a digital format, and then they can go to a digital asset exchange and trade. And this will actually enable a lot of opportunity for small and medium-sized companies to access capital, which is not possible today. And when started our business, like we started our journey back in 2018, we spoke to a number of founders who are running a parking business, to companies that are running, gaming companies based in Shanghai. And we found out the solution that we are providing is of interest for companies in different segments. Mostly, I would say pre-IPO, pre-growth, or growth stage companies. And that made us much more motivated to say, okay, there is a demand. And if we want to address the demand, we need to create a product, because we know that there is something that we can create. But for that, we need to, simplify the technology, simplify the regulation. And that's how Stoker was born, actually.
Now, what was your background in before you started, and were you on the technical side or more on the finance side?
So my background is I understand tech, but I am not a techie. I'm coming much more from the legal side. So I was involved in the legal part, in the capital markets transaction, help companies, in number of corporate financing deals and those kind of things. So I understand the legal complexities and the legal processes behind any kind of financing. And also I've seen and worked with a number of investors to understand, how the investment market work. I'm not a venture capitalist in that sense, but I understand the details or intricacies of a transaction. And technology-wise, I would say I can understand the tech. I can understand the high-level philosophy of a tech, but I'm not a coder in that sense.
Now, I always like to hear about, for your customer, what's a day in the life look like, and that really helps, I think, our viewers understand, exactly how they interact with you and what they get from it. So can you talk about like what the day in life would look like for someone that would interact with Stoker?
So most of the companies or the founders that usually reach out to us, they have a running business. So they have their own business that they're running in. They come to us to, raise some capital as an alternative to going to a bank or going to a VC or going to, to some kind of other lenders, right? They come to Stoker, and it's kind of an alternative investment platform for them. So these guys are primarily, working on their existing business. They have a kind of a revenue. It can be pre-revenue or a post-revenue. We usually like to have a little bit in the post-revenue, because pre-revenue is too risky to have it on the platform. And once they come us, what we give them a structure, a complete, investment structure, including the instrument that they will issue it. We provide the tech, and we also provide all the back office support. That means in the compliance support, any regulatory support, as well as any payment gateway support. So the only thing that the founder has to really do coming to us is really talking to the investors, understanding is the financial instrument that they're issuing on Stoker is of interest for them, and then talking to the investor and do kind of the marketing for the investment instrument. All of the stuff that is required for the issuances, be it the financial structure, be it investment structuring, or be it any regulatory or legal contractual creations and issuances of these digital securities, is taken care by Stoker in that sense.
So Arnab, since Stoker's truly a pioneer in this space, I would love to hear about some of the hurdles that you guys faced, because there's a lot of complexity here. Everything from technology involved to regulations, compliance, all that kind of stuff. What are some of the challenges that you guys, faced early on, and how did you get past that?
I think one of the biggest challenge for us is this is still technologically driven product, and it's complex technologically driven product. Blockchain products are still not so much easy to be used by a lot of people. So it's still for a niche audience in that sense. It is niche audience in terms of the investors that are investing on Stoker, as well as for the companies that are raising money on Stoker, right? So that's, I think, one of our biggest challenges, kind of the scalability for everyday people. I don't think Stoker is a platform where, grandma can come and like the product and invest. It's complex, and this is also philosophically what we believe, if I try to make it simple interaction with blockchain, I take out the fundamental philosophy of decentralization or, self-sovereignty, right? The moment I try to bring this element of, beautiful interface, very easy to use, I effectively controlling their private key, of managing their wallet or managing their asset. And that really, take us to the Web 2.0 solution that we are having. So what we're trying to do is in Web 3.0, right? The product where, it's not about username and password, but it also has a wallet connected to it. It has some private keys that you have to manage. So technically you are managing your assets. Let me make it much more simple. Maybe for some of your audience, it may go, kind of quite interestingly nerdy talk, right? Let me give you a prime example here. Last year, we saw this GameStop saga that happened, right? When the GameStop, AMC, and those stocks went off charts because of some Reddit comments and the Reddit subreddits groups, right? And when those people were trying to trade those stocks in the Robinhood and others, and they're trying to withdraw money, Robinhood stopped it completely. And there were a lot of people, afraid, and they were crying. They said, Robinhood, okay, why you're doing it? You're a centralized, gatekeeper. It's my money. Let me trade. What effectively happens is when you are as an investor, you hold the stocks and you think, okay, I am an investor. I hold my Apple stocks. You do not hold your Apple stocks directly. You hold that Apple stocks through a broker. The broker holds through another broker or some other entities. And that entity may hold through another entities. So you may see there may be 3-4 middlemen before the stocks are being held with some DTDC kind of CSD entities, right? What problem it creates is you don't have an access to your own assets. If you're an investor in Apple, you don't have a real right in that sense, right? You don't have the ownership. That's the reason GameStop withdrawal, when you want to withdraw from Robinhood, Robinhood can deny because the stocks are with Robinhood, not with you. What we are proposing, and that's what the Web3 or the decentralized blockchain-based technology can help, is we give you the real asset ownership into your own blockchain wallet. So you don't like Robinhood, you withdraw in a wallet and go to another exchange, the same way you can do with your Bitcoin, right? You don't like, let's say, Coinbase, you withdraw from that and you go to Kraken or you go to FTX. And this gives the asset ownership. The same philosophy we want to bring in the stock market is you need the asset ownership of your own securities. And this is, I think, fundamentally what we're trying to do. So this is actually one of our biggest challenge. That means when we are trying to enforce that, technologically, it's not easy to understand for a lot of people. But we are also quite happy because we are seeing a very interesting user group in on our platform from aged 20 to 40. I would say that's kind of the generation that will actually be working in the next 20-30 years. And these guys will be actually getting deep into the blockchain of crypto assets much more over the period. So we are quite also happy to support that audiences, and would like to also grow with that audience in the initial days rather than making the product for everybody from the day one.
So what was the beginning stages for you? Like, how did you actually formulate the product and the, what did it look like to truly create the startup?
I think when we started the journey, but one interesting part which we want to try to address is, it's a complex product in terms of tech. So how can we make the tech user friendly in that sense, right? How user can go into the platform, understand what to do the next, where to find the documents, what to read, and then make a mindset. Because if you see most of the investment platforms, if you have signed some investment documents, there are 600 pages document, you don't know what you're reading, right? And effectively doesn't give you any information, right? These are all the risks warning. So we try to make a product that gives you an understanding of what you're really investing in and what are your real financial rights that you're getting. So this was actually one of our key focus, was to make the platform as transparent and as informative as possible, both from a legal side, both from a technological side, both from user interface side. And the second part we wanted to make, to make investment simple, because simplicity is often overlooked. And this is what we try to always achieve, because though it's a complex tech, if we try to and can make it simple, more and more people will use, because investment is fundamentally what we need to do in today's world where inflation is going off charts, right? You have to think of your own money. Banks are not going to think about your wealth, right? They're not going to give you interest, and your money will not earn right now if it's put in the bank account, right? So everybody in the world need to understand investments and need to understand alternative assets and where they can invest and grow their return, right? As similar to hedge fund will do, or kind of private asset manager will do. And to make it accessible for a lot of people to do that, we have to make it simple. And this is, I think, the two main challenges, the two main things we wanted to focus on when we started the company. The third point is legal and regulation, right? Product like Stoker cannot run or operate if it's not in the regulated environment. So we try to find a regulated environment in Europe, because Europe has a very interesting growing demographics who also understand crypto and also who are interested in digital assets. And we also found a lot of professional investors outside Europe, non-US, Taiwan, Hong Kong, and others. They're also interested in those kind of investments. So we try to understand what kind of regulation will be suitable for those kind of investors to come in. And that's the reason also to choose Luxembourg, because Luxembourg has a very strong financial market globally. If you see the PayPal, Amazon, all of these countries, or all of these companies are operating in Europe from Luxembourg. That gave a very strong jurisdiction for this kind of products to operate from there. So these are the prime 3 points that we wanted to focus on when we started the journey for Stoker.
So Arnab, I'd love to just shift gears just a little bit to hear about the founder dynamic, because I know that we were going to have one of your co-founders on joining today, but I believe I thought I heard you say that there's others involved as well.
Yes.
So what does that dynamic look like, and what are the roles that each of you play in the business?
So when I start, I was actually one who talked to most of the founders. So I tried to bring the people together and started this entire conversation of hey, let's create something. And then I was quite fortunate also for others to agree on this crazy idea which I pitched that time and said yes to it, right? And they had all of them had their daily jobs, and they left that, and we started this vision. And I think one interesting aspect is what we were focusing on the initial days the company was being formed. And the company is already for quite some years, and touch wood, we don't have that much of founder disagreement, which a lot of companies usually face in the early days. And the reason I think one interesting things which you really try to focus inside the company is the trust and the element of accountability, right? We try to avoid a CEO title, because the smaller companies of 20-30 people doesn't necessarily need a CEO, but effectively kind of a lead for different pillars. So we have a business lead, we have a tech lead, we have a regulatory lead, and we have an economic and finance lead. So what we effectively do is each person has a very strong competence in their domain. Like I'm responsible for strategic and business development activities of Stoker. Tobias, my co-founder, who couldn't join unfortunately because of his family obligation today, he is responsible for product as well as the regulatory aspect of Stoker. We have my co-founder Lucas Kramer. He's much more from the tech side, a techie guy into the tech space for quite some years, 15 years right now, and also a very strong blockchain developer. He's focused on the tech. And what provides us, all this kind of competences is everybody knows what they're doing it, and everybody's accountable for any actions that they're taking. And this really helps, the company to rely on each other's decision. But definitely we discuss, we try to deliberate, we have our own opinions, own standings, but we don't try to overstep on each other. So what we try to do is, everybody has their own competences. Let them take the lead, let them take the action. If they want opinion, we are happy to give them support or something like that. But ultimate call need to come from that leader who is leading that department specifically.
And just given that, this is an innovation, based business that you guys have, how did the team of founders come together, or how do you do this on an ongoing basis to plan out your strategy and figure that out? And what does the roadmap look like? And how do you get from A to B? Like, how do you guys work together? What is that kind of working dynamic? So the lanes are clear, that everyone's, focused on their core competencies, but how do you guys focus on the strategy and vision of the business?
So initial days, Tony and Andy both, it was very challenging for us. never worked before together. We were not the best friends, so we don't know the dynamics and the emotions with which everybody works. So it was a bit challenging. Adding to that, the company of Stoker, like we from our day one, we always were remote first. We were never sitting together. We were all working in their own offices, and that makes it, more challenging. Thanks to Slack and those kind of digital tools, we managed, but it was always a big pain point. Later down the line, we discovered OKR, Objectives and Key Results, which is a fantastic tool a lot of companies are using in the tech space, which helps us to align, kind of an annual goal. And then we divide it in various cycles. And then what we do is we do monthly check-ins and then quarterly check-ins and those kind of things that really allows, the collectively for the team to see, okay, what is the final aim of the company, how we can achieve that, what are the key results and how we can achieve, and how we kind of accomplish those kind of key results with specific period. And that helped quite a lot. I was speaking to a lot of my founder friends in the industry, and many of them have got a lot of good results out of using OKR, and we thought, okay, why not we give it a try? And to be honest, it really helped quite a lot to really align what we are doing. And because at the end of the day, let's say even an intern is joining Stoker and working on some specific marketing activities, fundamentally that person can also see what his or her activities are resulting to, and which field actually, and what is the progress the company is developing because of that. This is very interesting information for them because they also feel a part of the entire journey, because it's an organization which cannot run without all the pillars and all the tentacles working in the same tuning, right? And this is why I think they're using the tools like OKR and others really helped in the company. And we are trying to, incorporate it much more in a granular level over the period, because we think it's a very interesting tool to be used in any kind of ecosystem. But also what we learned in a lot of companies, and when I was talking to some of the founders, they mentioned is, when you have a 6 people or 15 people or something, OKR is not suitable because it's for a big organization, like something like this. And I spoke to some people who have already used it for, I would say, 5, 6, 10 years. And they mentioned earlier you use such kind of tools. Even if you're at 5 people or 6 people or 7 people, the earlier you use, the better it is. Because once your company is at 40, 50, then if you try to incorporate this kind of element into your business, there will be a revolution internally because people are not used to it in those kind of structures. So it's very hard to incorporate. So I would advise in this case, anybody looking into the space, anybody starting a business, is incorporate such kind of tools as early as possible into your business operation. Because once it is there, once it's a part of your DNA, once it's a part of your culture, it's easier to scale then.
Yeah, I would totally agree with that. I think building some sort of system, whether it's OKR, there's EOS and other ones, is just really important because it keeps everybody accountable. One thing I'd be curious about, you mentioned about where you're focused right now geographically. And so what was your original plan, and then what has unfolded as you built the business?
So for us, it was very important, we started the company by bootstrapping in the initial days. So we did not take an external funding immediately. We took it once we saw a clear vision, what we want to achieve and those things. So for us, it was important, to try and explore the product market fit at the least possible expense without raising too much money and without, spending too much money. Just try to achieve the product market fit as early as possible. So we tried to see where our legal costs can be reduced, because most of our costs we were assuming that point of time was regulatory, licenses and legal, not from a tech point of view that much, but much more on the legal and regulatory. And that made our conscious choice that, okay, we are sitting in the European market, operating from Luxembourg, operating from Berlin, operating from Hamburg. So why not we focus on the European market to start with? And as we scale, as our demand will increase, as our products will be much more popular in the market, we explore different markets. That was kind of our strategy, and this is still the strategy inside the company.
And did it unfold that way? Because it sounded like you had mentioned earlier that maybe it wasn't quite focused on the EU now, or so has it unfolded that way, or has there been some hiccups?
So initially, when we started in 2018, 19, I would say until 20, we were very much concentrated in the European market, both for retail investors as well as for professional investors or qualified investors. Later on down the line in 2021, we opened for other markets for professional investors only, like in Hong Kong, like in Taiwan, like in Singapore. There we do not support retail investors, but definitely we can take professional investors. We're also looking into the US market at the moment to see how we can expand into that market, maybe with some strategic partnerships or maybe with some strategic acquisition. So this is kind of definitely one thing which we're looking into, and we are definitely unfolding with the same strategy. Also, I think one interesting thing which we also learned over the period during the years is when you're expanding to a new market, it's always important to have a strategic partner. And ideally, it is good to have that person in your cap table or maybe very closely connected, because it's not always easier for anybody to start from scratch immediately from a new market. And that makes it much more for a smaller companies very hard to start in a new market. So why not partner with some existing player and see what is the demand for your product in that market? If there is a demand, if there is scale, then you think how you can scale in that market, or you can strategically acquire or do something better. But like for me personally, also and also in the company, we really don't want to spend full resources and enter into market and take the lessons later on. Rather, do a baby steps and enter the market very slowly. Maybe that will also lose some of the revenues. I understand that's a downside to that, but that actually also protects you from any kind of disaster in your organization, because any expansion suddenly and then contraction can create a lot of stress in your organization, and that can decrease the morale of all the people who are working. So that's kind of the learning that we usually like consider when we are trying to expand to a new market.
So along those lines, one of the things we speak to founders on this show, and the question is always, how do you find those initial customers, those initial folks that are going to join the marketplace? What was your strategy to get the first X number of folks on and confident that this would be a good solution for them?
So Stoker has been structured as a marketplace, and marketplace is fundamentally very hard to pull it off, right? A lot of investors these days doesn't want to touch a marketplace because they think, okay, yeah, you have to first create a demand side, then you have to create a supply side. And that's a kind of a chicken and egg situation. Who comes first and whom you want to focus on, right? What strategy we took? We took much more from the demand side, where we said, okay, if we have a good quality companies and projects raising capital on Stoker, and those companies are nowhere else, investor has to come to participate in those offerings. And we did a very interesting product with one of our clients who is based in Canada as well as in US called Blockstream. And we launched a product that is a bond. It's a debt instrument which provides you access to the Bitcoin mining. Now, if you know Bitcoin is created by an activity called mining, and the Bitcoin mining can be very profitable. It's one of the most profitable industry in the crypto space at the moment. But that industry is being accessible only by a handful of companies and a handful of investors. So we try to open the market for a lot of investors, and till date, that offering has raised over 40 million on Stoker from an investor base of over 80 people. And whenever we launch an offering of 5 to 10 million of that bond or note on the platform, it gets finished or it gets subscribed within a matter of few hours, because there is a huge demand of that product. So we really try to focus on the product side, what kind of offerings coming. We do not allow everybody to come on the platform and offer. So we keep a control on the quality. And once the quality is there and the investors see how, okay, there is a good quality products that are raising the capital on Stoker, that are willing to also give a good return, then the investors come in. So this is how we are managing the issue of this, dilemma of a marketplace, who comes first.
Yeah, it's great.
Arnab, I would love to hear your thoughts on other innovations that you foresee, or maybe you actually are seeing early stage, just roughly in the space, just in the blockchain and alternative asset space, not only due to like technology maturation, just but where we're at in the world, things that are going on. It's a super interesting space that I think a lot of people are interested in due to your work and involvement there. Would love to get you a little bit of your perspective of where you see things going.
I think fundamentally, we are seeing an interesting global phenomenon at the moment because of all this Russia and Ukraine conflict. And this may change. Some people also say we are kind of closing the era of globalization and we are going back in the wheels. I'm not sure how much we can say that, but definitely there is a significant deviation from the principle of globalization. One product for all the market. There may be product for specific geographies, and this will come. And there I see the role of digital assets, right? Role of digital assets like Bitcoin, stable coins like USD Tether. There's also kind of, other payment infrastructure based on blockchain. So I think there are a lot of innovation, interesting innovation happening in the Bitcoin space itself, because if you see the global tech stocks kind of went down, but Bitcoin price did not go so much down. That means there is kind of a demand that is keeping that price up, and the price also went up very recently, right? So that's an asset class many of the developing countries may rely on to store their value of the wealth. Because imagine, like, I'm coming from India, inflation will soon hit double digit. In most of the countries, like in Turkey and others, is already kind of 300%, something like that. Inflation happened in last 2-3 years, right? At To get away from the inflation, or to save your money, or to save your savings, you need some assets that are easy to hold, that are easy to transfer if any political situation changes, and that are also liquid, that you can trade immediately and convert the value. And I think Bitcoin has a very strong value proposition in that sense. So I think a lot of innovations will happen in the Bitcoin space specifically, and this is, I think, a very fantastic space to look into it. The other things which is also happening in the stable coin, that is the Tether, USDC. And if you see, when this kind of war situation happening, even Ukrainians, I see a lot of Ukrainians are coming to Berlin now because of the war there, and they are carrying their money not only in, bank account in euro or something like that, on USD. They're carrying their blockchain wallets with stable coins in it, because it's easy to carry, right? And it's also, they can come here and then pay it. And this is a very interesting thing, how technology can enable them, because they don't have to rely on a bank account. They don't have to rely on a centralized middleman. They have the full ownership of their money when they're coming out. It's a very interesting perspective. So I think there are a lot of innovations will happen in that space. We're also seeing a lot of discussions regarding Web3, regarding this metaverse concept. You see, Facebook tried to already steal the concept of Meta, change their name. But I'm a little bit skeptical, social media company coming into the metaverse, but I'm much more seeing the gaming companies, this Half-Life, this, all this kind of gaming metaverses that is already there, people are using. They can actually come, and they can be very interesting space for people to hang out, people to, showcase their products, kind of a virtual life people can live in. So that's an interesting space I'm very interested in. Also, I'm looking at, and much more interested in the space segment, the suborbital satellites and those kind of things, because as more and more this war and I would say international conflicts will increase, people may rely on kind of satellite services. People can rely on, alternate communication solution, and that industry can provide. So these are three things which I can see very interesting to watch out in the next couple of years. In the investment space, and this is very interesting, where Stoker became relevant, is the vision for us is more and more, people are looking for an alternative asset, not only to save or preserve their wealth, but also to grow their wealth. And there, I think the asset classes like, music royalties can be very interesting. Let's say, for example, today in Ukraine, people may still, listen to a song from Bob Dylan. If the internet is working, they can go to Spotify and listen, right? So that song will still make a revenue. So those kind of assets are non-correlated assets, and they can provide a good return and good value for money. Also, this kind of, equity of a gaming company, this kind of small and medium-sized companies. We have a very interesting bakery, French bakery in Dubai, that is raising money on Stoker. So this kind of interesting businesses, which are kind of mom and pop. They will not be unicorn, but they will definitely be a zebra in their own market. So this kind of products can also provide an interesting return. So I see there is also kind of a trend for this kind of alternative invested markets to also really grow in the coming years.
So you touched on it a little bit, but where do you see Stoker going in the next, 3 years? What's the vision? What is the game plan? And what are you guys looking to do?
So for Stoker, I think one interesting aspect is we were initially focusing in the last couple of years to issue innovative assets that are providing very good amount of return to the investors. Now what we are trying to do is connecting with as many secondary markets or digital asset exchanges where people can trade those assets and get liquidity. So in the next couple of years, our focus will be to provide the liquidity for the existing issued assets. And this will bring the entire wheel into life, because if more and more assets are willing to come, they need a marketplace to be traded and get a liquidity. And this is what we are trying to build. So I would say next 2-3 years, once we set up this interesting market for the primary issuances and the liquid secondary market, I would expect more and more companies will be using that, and we will have more and more volume. So in the next 2 and 3 years, our aim is to at least reach 2 to 3 billion asset under management, at least the volume that we're processing, because more and more volume processed by Stoker means more and more companies are willing to raise money and more investors are also getting return. So that's kind of our kind of focus at the moment.
On mute. So going back a second to what you were talking about with some of these technologies, I'm kind of curious for our other founders that are starting new businesses, they may be in the SaaS and technical space, but maybe they don't know about, as much with Bitcoin and NFTs and Web 3.0. What do you think they should be paying attention to, and how do you think they potentially should look at, what they should be integrating with or exploring into if they're not into the space?
I think if you're definitely into a Web 2.0, let's say a SaaS founder or anything that is regarding anything internet, you cannot close your eyes on the blockchain space, because how people are signing in or logging in will change. Now you can sign in with your Google account, let's say, right? But in future and today itself, a lot of platforms you can log in with your blockchain wallet. That essentially your own identity in that sense, right? So there need to be some strategy how you're integrating, because that's an audience that will grow, that will get mature, that already has generated a lot of capital. That's kind of a very interesting target audience. So there need to be a strategy how you can also connect and create a bridge to that audience. So I would say this should be a part of a strategy, because everything in digital format will be somewhere or the other tokenized in some format. And this will provide you an opportunity that once you have the integrations and understanding and the roadmap already in your product, you can actually integrate with the right players and the right products, and then target the right audiences, which is kind of niche for that specific industry. So I would say this should be definitely a part of strategy if you're launching or if you're already having a running product and a successful product in the Web 2.0 SaaS space.
Yeah, I find that really interesting with the authentication piece, because that's something I wasn't aware of, and I think that opens up a lot of opportunities for these Web 2.0 companies to at least start maybe dabbling in this space. I guess the one thing I would be curious about is there are so many different platforms and solutions. Do you see consolidation coming, or is it just going to get more, diverse and distributed?
I think it will change. I will just also add to what I mentioned, Andy. The marketing also, I think, will change quite a lot, how we market currently the products. Because imagine when you see somebody's wallet, like my Ethereum wallet or my crypto wallet or something, and everything which I do is publicly visible. So you can really create a profile, is what I like and what I don't like. So you can make a very targeted marketing, which is not possible in the Web 2.0, right? It's a very interesting tool. A lot of SaaS founders and a lot of business founders in digital space doesn't talk about, but it has a huge potential that we will see in the coming days. Regarding what was your product, what is your question on that point? Can you repeat, Andy, the question? Sorry, I lost the track.
Just more that it feels like the blockchain space, NFT. There's so many different platforms coming up and different coins, and it just feels so. I mean, I think for someone that's not in it every day, it feels like there's just so many different directions to look.
Yes.
And I'm just kind of curious to the point that a Web 2.0 person should be paying attention to it. One, where should I look since it is so much? And do you see potential consolidation of that, or do you think it's going to continue to get more dispersed?
I don't think we have reached the time, or the right time frame for the consolidation. The market is still exponentially growing, and this will grow because more and more interesting ideas, interesting products are being experimented on. Yeah, there may be consolidation in the NFT space, but consolidation of the Web 3.0 will take some time. Maybe the consolidation of the exchanges will take some time. So I will not say we have reached the era of consolidation yet. Regarding where the founders need to look into it, it depends on the business model which they're operating, right? There is no single space where they can look into. Let's say, for example, if you're a gaming founder, I would say definitely look into web metaverse idea or NFT ideas, right? If you're into the SaaS platform, maybe this logging credentials, how you can enable that, how you can get that audience. If you're into the business of, let's say, just a normal simple softwares or something, can you provide kind of NFTs for engagement of your user base, engagement of office employees or something? So it very much depends on what business you are in. But whichever business vertical you are in, there is always a touch point. So it's important to understand which touch point is relevant for you.
That's fantastic.
Arnab, before we move kind of into our last couple of questions here, where can our viewers and listeners go to learn more about Stoker, maybe find out and connect with you?
So you can reach out to stoker.io, stokr.io. Maybe it will be visible somewhere on your platform, or maybe on the YouTube videos. If you're there, you can put in the description. You can reach out to there, see the platform. If you have any questions, write us an email at hello, HELLO, at stokr.io. We usually respond very fast. If you are following also us on the social media, like Telegram, like on Twitter or on Instagram, we're also responding quite fast. So please feel free to ping us if you have any questions, or you want to work with us, or maybe anything that you want to explore, any collaboration. We're happy to always discuss.
Awesome. That's fantastic.
Great. So I'm always curious from our founders, if you were able to go into the past before you started the business and have coffee with yourself, what's the one piece of advice that you would give?
So one piece of advice, if I have to change something, right?
Yeah, or you're just going back and you're talking to yourself before you started. Like, what's the one nugget of wisdom that you would provide to your past self?
I think one interesting thing which I want to really tell my future self, or whatever you call it, is a past self or something, is it's good to be slow. It's good to be take time and relax and really understand the pain point and product, and then nudge the product properly, because entrepreneurship is not a sprint, it's a marathon. And to be in the marathon, you need to really be patient, because I think what pays off at the end of the day is how patient you are, and how calm and consolidated, like how structured you are. And this comes in the terms of patience, how patient you are in the market. And this I see is quite interesting fact is, this lot of founders often underlook, or often miss to look at that, or often they don't consider, is entrepreneurship takes a lot of patience, a lot of time. Time is a very key aspect here, right? So it's not something wrong if you're taking 6 years, 7 years time to create a proper business model, but you have to be very much patient. And a lot of times, in the early days, you want to make something in 2 years or 3 years, and then you burn out all your money, all your spirit, kind of all your employees' resources. And sometimes you may not be in the right time and the right market. Maybe your market is coming for a few years. Had you have been in the market for a few more years, you could have make it. A lot of people misjudge that part. So this, I would say, definitely one is the wisdom I would have given to myself. And this was, I think, one of the biggest challenges. Also, this market is growing. This market is definitely growing at not the fastest speed as we would like, but it's growing. If I see from a zoom in situation, like sometimes we have to do a zoom out, right? We always try to see in 12 months, 8 months, 9 months, but see from zoom out situation what we have done in 5 years, 6 years down the line. That shows a fantastic result. So this is, I think, one interesting learning I also had in the recent days. And yeah, I would have loved to tell me this before, when I started my journey.
It's fantastic.
Well, awesome. Thank you so much, Arnab. This has been really interesting. You guys are doing some fantastic work in a rapidly changing space, a lot of innovation and things you're bringing to light. So we really appreciate that. Keep up the good work. Thanks again for your time here today. For our audience, thanks everyone for tuning in, and join us again next time. We'll see you then. Take care, everybody.
Thank you, Tony. Thanks, Andy. Pleasure.
Thank you. See you, everybody.
Ciao.